Stellar's next move. Don't blink. Stellar, XLM, has been on a serious roller coaster ride lately. And if you've been watching the charts, you already know what I mean. After surging to a cycle high of 63 cents back in November 2024, the price took a sharp dive 65% down from that peak. And right now, it's hovering just above the 22-cent mark. Now, on the surface, that kind of drop would have most retail investors running for the exits. But here's where things get interesting. That pullback? It might not be the red flag it looks like. Because sometimes in crypto, price dips aren't signs of weakness, they're setups. And when you look under the hood, what we're seeing from XLM right now is starting to look like the early stages of something a lot bigger. The kind of setup that smart money watches for. Because the charts, they're tightening. Volume, shifting, and technical indicators, flashing early signals of a breakout. And while the headlines aren't talking about it yet, that's exactly why this matters. Because when the breakout happens, it's not going to wait for mainstream attention. It never does. This is one of those moments where you either spot it early, or you're left chasing green candles after the move's already halfway done. So in this video, we're doing what we always do. We're cutting through the noise, breaking down the data, and laying out exactly what's happening with Stellar right now. The key consolidation pattern that's playing out behind the scenes. The technical indicators that smart traders are watching. The price levels that could define the next breakout phase. And why institutional interest could turn this from a technical bounce into a full-blown trend reversal. If you hold XLM, or you're even considering adding it to your portfolio, this is the kind of insight that can make or break your next move. So don't just watch a few seconds and bounce. Stick around. Because what we're about to break down could be the early signal of one of the most significant XLM moves in months. Let's get into it. Consolidation and the wedge formation. Let's talk structure. Because the price action on Stellar, XLM, hasn't been random. After topping out in November at around $0.636, the market didn't just crash. It started forming something very specific. A descending wedge pattern. Now, if you've been in crypto or even traditional markets, you know this setup. It's one of the most recognizable and historically one of the most powerful reversal formations out there. We're talking about a series of lower highs and lower lows, gradually compressing. The range starts wide, but it tightens. And that tightening, that's tension building. That's pressure loading up. And here's what usually comes next. A breakout. Either to the upside or, in rare cases, a continuation to the downside. But more often than not, especially when fundamentals and sentiment begin aligning, it breaks upward and it breaks fast. Now, here's where it gets interesting. On April 7th, XLM hit a critical moment. It tapped the bottom trend line of that descending wedge. But instead of breaking down, the price held firm, right at the 0.786 Fibonacci retracement level, which is sitting near 21 cents. Let's break that down in plain English. That's not just technical noise, that's precision support. The 0.786 Fibonacci zone is where smart traders expect buyers to show up if a reversal is in play. And what did XLM do? Printed a strong bullish candle right there. That's the market saying, we're not going any lower, not yet. That single bounce? It validated the wedge. It told us that big players are watching that level, and they're not letting it break without a fight. It's a confidence signal, a message that accumulation is happening. Zoom out and you'll see it. The wedge is tightening. And whenever you see price action coil like this, you need to ask yourself one thing. Who's loading up while the rest of the market sleeps? Because wedges like this aren't built by accident. They're built by accumulation. Quiet accumulation. And the longer it compresses, the bigger the release. So what does that mean for you? It means we're likely close to a decisive move. One that doesn't just reclaim resistance, it redefines the entire trend. And remember, the wedge doesn't give you multiple chances. When it breaks, it moves. Fast. In the next section, we're diving into the signals confirming that this move might be closer than most people think. The indicators are there, you just need to know how to read them. Stay locked in. Technical indicators backing the move. Let's dive into the charts and see what the indicators are telling us. MACD is showing clear bullish divergence. The MACD line is making its upward move, even as the price action has been lagging behind. This isn't just coincidence. It's a classic sign of underlying strength, suggesting that momentum is quietly building, ready to break through once the price catches up. RSI? Right now, it's still under the 50 mark, but it's trending upward. That shift is crucial. If we break above that halfway point, we could be looking at a solid confirmation of a trend reversal. It's like a subtle signal from the market that buyers are starting to gain control, pushing the momentum into bullish territory. EMAs? The short-term and long-term exponential moving averages are tightening up, and when that happens, it's a prelude to something significant. If we see the short-term EMA crossing above the long-term one, that's the golden cross, and historically, it's one of the strongest bullish indicators out there, often leading to sustained upward movement. But here's the key: these indicators don't exist in isolation. When multiple signals like these start aligning, it's more than just noise. It's the market telling us that something is brewing beneath the surface. The technical picture is starting to shift, and the odds of a strong move to the upside are stacking in our favor. Keep an eye on these setups. They're setting the stage for the next big move. Quick reminder for smart traders. Before we go deeper, here's the move. If you're serious about catching plays like this before they move, not after the headlines, make sure you're subscribed to Be Crypto Smart. We drop real-time breakdowns like this every week, and if you're not tuned in, you're missing setups like this in real time. Alright, back to it. Potential price targets. Where could XLM go? Now, let's look ahead. What's the game plan if we do break out? First, we need to identify the short-term resistance zones. We've got key levels at 30 cents, 34.9 cents, and 37.5 cents. These are the areas that have acted as turning points before, places where price has stalled or reversed in the past. As price pushes upward, expect traders to start locking in profits at these levels, which could cause temporary pullbacks. But these aren't brick walls, they're just milestones on the way to bigger moves. Now, let's zoom out a bit and think long-term. What happens if the market really heats up? Some models are forecasting that XLM could reach anywhere between 37 and 42 cents. These targets are based on solid technical analysis and consider not just the price action, but also the broader market environment. This range could represent the sweet spot for where we could see serious resistance if we catch the tailwind of a broader altcoin rally. But here's the thing: these numbers aren't just pulled from thin air. They're rooted in Fibonacci retracement levels, which are often precise at highlighting key price zones, as well as historical resistance points where the market has struggled before. And let's not forget adoption metrics. As XLM continues to gain traction with real-world use cases and partnerships, these levels could prove to be stepping stones for even higher targets in the future. So, when we talk about these price levels, we're not hyping them. We're looking at data-driven projections. We're analyzing the technicals, the fundamentals, and the broader market dynamics. These targets are within reach if the conditions align, and they could be the foundation for bigger moves down the road. Adoption and fundamentals. Price action is crucial, but let's take a step back and look at the bigger picture, because this isn't just about chart patterns and technical setups. Stellar, XLM, is in a unique position. While other altcoins are riding the hype train, primarily fueled by speculation and social media buzz, Stellar is out there quietly making real moves. It's one of the few altcoins that has solid institutional traction, and that's something you can't ignore. The narrative isn't just about a flashy pump or short-term gains, it's about long-term utility and adoption. Stellar has been building partnerships across the financial sector. Banks, payment providers, and even governments are on board. This isn't some abstract idea, it's a functional ecosystem. XLM is positioning itself as a bridge currency for global finance, allowing for fast, low-cost cross-border payments. This real-world use case makes XLM fundamentally strong, with a clear purpose that extends beyond speculative trading. And here's the kicker. As adoption grows and the use of XLM scales up in the real world, its price becomes more than just a reflection of technical indicators. It starts to become directly tied to its utility. The more institutions and governments integrate Stellar's technology into their payment systems, the more demand there will be for XLM, pushing its value higher. But there's another layer to this supply. As Stellar's ecosystem expands and the network gains more traction, the supply of XLM becomes an increasingly important factor. With a capped total supply, the tightening circulation of XLM could lead to upward price pressure as demand accelerates. So, when you combine growing adoption with a limited supply, the fundamental setup is there for something powerful. This isn't just another altcoin playing the speculative game. XLM is quietly building the infrastructure for the future of finance, and that's where the real value lies. When the market begins to wake up to this, the equation shifts from a short-term trade to a long-term investment with serious potential. Keep an eye on the fundamentals because this is where the true upside lies. Supply crunch equals potential explosion. Here's the part of the equation you really need to pay attention to because it could be the game changer. XLM's available supply on exchanges is shrinking, and that's a critical signal. When supply tightens, it sets the stage for something big, especially when you combine it with rising demand. But it's not just random selling or hoarding we're seeing. No, it's much more strategic than that. Wallet data shows that institutional players and long-term holders have been quietly accumulating XLM, scooping up as much as they can. These aren't retail traders jumping in for quick flips. These are the smart money investors positioning themselves for the long haul. Now, here's where things get interesting. When institutional buying meets limited available supply, it creates the perfect storm. The more XLM gets locked up in long-term wallets or institutional holdings, the less is available for regular trading on exchanges. So, what happens when a wave of demand suddenly hits the market? You're left with a supply shock, a situation where there just isn't enough XLM to go around. And that's when things get explosive. We've seen this before in markets. A supply crunch combined with a sudden surge in demand can trigger parabolic moves. The price starts to rise and people start to take notice. But by the time the chart starts trending upward, it's often too late for those just catching on. The smart money, those institutional players and long-term investors, are already positioned well before the move happens. They understand the value of holding during the quiet accumulation phase, knowing that the real profits come when the market finally wakes up and the price explodes. So, as the supply on exchanges tightens and the demand begins to build, keep an eye on the price action. If this supply crunch continues, we could be on the brink of a major breakout. The stage is set for a parabolic move, and the smart money is already ahead of the curve. The question is, are you watching closely enough to spot the opportunity before it happens? What's next for XLM? So, where does this leave us? Right now, XLM is showing early signals that something big is brewing beneath the surface. It's setting up for a potential shift, and the indicators are stacking in its favor. We've got a bullish descending wedge setup, which is historically a reliable pattern for a breakout. Technical indicators aligning across the board, from MACD to RSI to EMAs, pointing toward growing momentum. Historical resistance zones that are within striking distance, ready to be tested and potentially broken. And let's not forget the macro narrative. Institutional adoption and real-world use cases are quietly ramping up, even though most of the market hasn't fully caught on yet. If this breakout plays out, don't expect it to wait for retail to jump in. The early movers, the smart money, are already positioning themselves. And when the price finally starts to run, it won't be a slow climb. It'll be a fast-paced race to catch up. And by then, the best entry points could be long gone. So here's the real question. Are you positioned? Or will you be the one scrambling to chase candles when the headlines start hitting, wishing you had acted sooner? Time is ticking, and the market has a way of rewarding those who anticipate the move, not just react to it. Keep your eyes on the signals because the next few moves could be crucial. Stay ready. Stay smart. If you made it this far, you're already ahead of 90% of the market. But don't stop here. Subscribe to Be Crypto Smart right now, drop a comment with your XLM price prediction, and turn on notifications so you don't miss the next breakdown. Because this isn't about hype, it's about getting the right information before the next wave hits. Stay smart. Stay ahead. Catch you in the next one.